What's up, y'all? This is Lance, and I want to thank y'all for tuning in for another video. Hopefully, y'all will find some value in the information I'm about to present. I'm going to try to make this as quick as possible. But this one is for my swing traders that don't know how to read charts quite yet. Or for whatever reason, you just can't read charts. You may not even have a desire to, or feel like you need to read charts or need to know how to read charts. And so this is not meant to be a replacement to whatever strategy you currently employ. This is more so meant as a complement to your current strategy and method or whatever you use in order to swing trade. So, for example, let's say you're looking at Qualcomm and you decide that, well, first off, this is a daily chart, uh, by the way. So each candlestick that you see here represents one day. So let's say that, you've been following Qualcomm. Let's say it's around this date. You know they're reporting earnings, maybe after hours or whatever. And so you find out that they beat earnings, which I do remember they did beat earnings this past quarter. And you decide, I'm going to put Qualcomm on my watch list for tomorrow for a potential play. So, boom, the next day comes. You jump in Qualcomm right at the open. Here's what I want to, suggest to you. Now, again, this is for people that swing trade and don't necessarily know how to read charts. So when you jump into Qualcomm, set this level here, this candlestick, as your support. So this level will also be your stop loss. So you jump in Qualcomm, you set your level, which will be your entry candlestick, and you say to yourself, and you give yourself a visual reminder, which is this trend line here. You say, okay, I'm going to stay in Qualcomm as long as this price action remains above this level right here, which is my entry candle. And now, don't get me wrong, this does not mean that you stay in Qualcomm until, it closes below this candle or this trend line, because of course, you have your own ideas for, or you have your own ideas or methods or strategies or whatever. I can't figure out what I want to say about that, but what word I want to use. But you have your own exit strategy, right? So, get out whenever you want to get out. But if, let's say you jump into Qualcomm and it goes against you, you get out at your entry candle, right? So, you jump in at 1025 approximately. If Qualcomm were to, dip to 1025 and below, get out. And you can always reposition, and I'll try to find an example of what I mean. So, yeah, so as you can see, jumping in Qualcomm right here at the open on 7:30. The open was 1025 and it ran all the way to 123.93. So almost to 124 within a few weeks. So, that's a pretty significant move for this company. So, like I said, pretty simple. Stay in it until you hit your profit target, of course. But as far as managing your trade, this is just a simple method that you can use to say, if this trade goes against me, this is where I'm getting out. So yeah, pretty simple. Just it's definitely not the only way to manage a trade, but just something that I figured I'd share, and hopefully you guys find value in this information. But let's see if I can find an example of if something kind of goes against you. Let's see. Hmm. I had my example up earlier. Let me see. Hmm. I think we can use Walmart as an example. Yeah, let's just go back to Walmart. Okay, so let's say that you jump in Walmart. Uh, you're feeling like Walmart may be bullish for whatever reason. Um, this isn't really the best example, but let's say you're feeling, that Walmart may be bullish. For some sort of news came out and you decide, okay, I'm going to grab calls on Walmart. So let's say you jump in around, let's say you jump in around here because you're thinking, oh, let me catch some of that, let me catch some of that run up. And it does kind of run up, right? And you decide, I think I'm gonna hold through earnings. So you get in right here on this bullish candlestick on 5-1. That's, your expiration is sometime in the future. That also encompasses this 5/18 date. So you're planning to hold for a couple of weeks, more than a couple of weeks. So Walmart, does some consolidating. Then it starts, its upward move. Earnings comes, big sell off here. Well, first off, you want to draw your trend line here. And more than likely, you would sell before this point in time. So, um, so I'm drawing two trend lines here. So one trend line represents the bottom side of that candlestick, and then the other trend line represents the top side. So you can get out at any of those points. So boom, you're in at 5-1 in calls. Sell off at earnings. What you can do is sell once the price reaches that. Once the price reaches the top of that entry candlestick, if you please, you probably sell before then. But let's just say, I'm not sure if Walmart beat earnings. I'm just gonna say, let's pretend that they did, and there was just a sell-off you wasn't anticipating. So you decide you're gonna hold for a little while in hopes to try to recover um, what you've lost on this play. So you sell here. What you want to do is don't necessarily take your eyes off the play. So once you see another candlestick breach through this one, this top trend line to the upside, that's when you can get back in your play and try to go get your money back. So yeah, so in the first example with Qualcomm, once you enter, the price never returned to your support level. But in this example with Walmart, the price did return to your level and it actually fell below it. So in this case, you want to wait for the price to go back above your entry candlestick before you re-enter that position. So pretty simple. I don't want to make this longer than it has to be. If you have any questions, any suggestions, definitely leave a comment. Please like, subscribe, share. I greatly appreciate it and hope that I can continue to put out some useful content for you all. But yeah, happy to help. Thanks for watching.